Good morning, trade pros. Wednesday, November 19th of 2025, the day we have been waiting for, the day of NVIDIA earnings. Tonight, after the bell, once the market closed, we're going to finally find out what this AI bubble talk is all about. All right, so hope you've had a great start today. Hope you had a great evening, great trading day yesterday. Bubble talk is heating up on the wire and in the news. Obviously, pundits, everybody's talking about it. It's been coined the AI bubble. And so the discussion gets a bit of an update this evening or after the closing bell with some actual factual numbers. All right, it's right after the bell. NVIDIA is expected to report. Remember, NVIDIA is 7% of the S&P 500 and almost 14% of the NASDAQ index. So both indices, both markets susceptible to being whipsawed from this one stock. All right, NVIDIA is already down 12% from the October peak. All right, it's already the sharpest pullback in months for the stock, even though it struck new deals with Anthropic and Microsoft. But here's where the concerns are coming in. China export risks, big institutional selling. SoftBank got rid of their position. All right, Peter Thiel trimmed, or actually got rid of his entire holdings as well. And Michael Burry had $1 million worth of puts on NVIDIA. So tonight we find out what the deal is. Here's what matters after the bell and what's going to be important. Analysts are expecting $1.24 earnings per share and $54.4 billion of revenue for the quarter. The market wants to see some clarity on AI spending, the backlog, the order book, and just seeing overall how much NVIDIA has sold in chips and how much the demand has gone up and any future pace and guidance of these sales. It's going to be interesting. All right, sentiment's a little bit cautious, but it's going to set the tone for tech, for semis, and indices into year end. NVIDIA is a really, really big constituent of the index. It used to just be a little video card maker, and now it's become the dominant AI stock of everything. I remember their video cards. And, I had a little gaming stint. I'm not going to lie, but it wasn't really large or pronounced, or I didn't spend too much money or time on it. But yeah, NVIDIA used to just be a video card company. Options markets pricing an 8% move in either direction. So expect volatility for sure after the bell, both in the stock, both in tech sector, all in S&P, NASDAQ, everything as well. All right, and again, this is going to set the tone not only for the next couple of days, and not only is it going to kind of sway the market in one direction, but it could set the tone for the remainder of the year and build on that momentum. So very, very, very important day, but that happens after the bell. After the bell, or today in the afternoon at 2 p.m., the Federal Open Market Committee is releasing their minutes. I thought it was a Fed meeting, and I went ahead and canceled the trading day for myself. I'm going to let Victoria Infetti and our oil desk manager do the room today. I'm going to step aside. I'm going to do an early day with the kids. And I actually was excited to do a day with the kids. I was looking forward to it. And I was like, hey, this is the perfect timing because the FOMC, blah, blah, blah. But it's just meeting minutes. It's not enough to be afraid of. Had I not made the mistake to assume it was going to be a Fed meeting, I would have been trading today. It's not enough to run away from the day from. But, that's my honest mistake. I should have known it's December. Usually quarterly are the meetings that have decisions to them. But there are some off-quarter meetings as well in the past. So it's, honest mistake. Didn't mean to kind of minimize the day or whatnot. But if it was the FOMC meeting, like, of actual decision-making, not just the minutes of the prior meeting, I wouldn't trade. And I normally don't. But anyways, I'm going to enjoy a day with the kids anyways because I've already made commitments. But here we are. All right, today in the afternoon, we have some speakers too. We have Williams, Logan, Barkin, and Moran all speak today. That's a lot of Fed speakers. The meeting minutes this afternoon are expected to show a divide between the Fed, the committee. Okay, and that's interesting because the markets now see a 40% odd of a December cut. That went from 70% down to 40. That's a 30% decrease. That's huge. All right, and traders are watching how closely the minutes align with Powell's hawkish tone, because it isn't a surprise that interest rate cut may not happen in December. It's gone from 70% probability to 40. It's already priced in. All right, 40 is not a betting chance. Over 50 is more than likely. Under 50 is less than likely. At 40, we already kind of know that. Right? We're not looking for whether or not the rate cut's going to happen in December. We know there's better odds that it won't at this point than it will, but we are looking to see if the meeting minutes confirm Jerome Powell's hawkish tone, if the meeting minutes show the dissent are still dissenting, if anyone has flipped sides on the Fed to support a rate cut that didn't previously, and vice versa. That's what we're looking for. That's what the market's going to be interested in. All right, my Fed policy dashboard on TradingView. Built myself little dashboards for different things, and they're pretty potent. They work really well. I'll show it to you if you want when I turn around. I just have to update my personal information. Once a year, you got to get your client to update their information. It's called KYC, Know Your Client. It's a legal and regulatory requirement. So I had to do that. I couldn't access TradingView. I fixed it. I looked at my Fed policy dashboard this morning, and I'm like, what does it tell us? What has happened since the 70%? Because I hadn't taken a peek at it in a while. And my dashboard told me this: the December cuts are nearly gone. Like, the market's priced in the fact that they may not happen. Early 2026 cuts now look smaller and later. So it's not only December, it's everything after it has been pushed further out and less cuts. All right, and volatility is rising because the market got ahead of itself. Short-term fear, long-term acceptance of higher for longer. Okay, so the markets don't really mess with it. Like, you shouldn't be cutting, or at least they've priced in the fact that there's going to be a cut in December and less cuts later on in the year. And so now we're just looking for NVIDIA to rescue us. I found this next thing very interesting. I wanted to bring it to your attention. Bank of America does something called the Fund Manager Survey. And if you read anything backwards, it sounds like the explanation of what you just said. So Fund Manager Survey, it is a survey of managers of funds at Bank of America. Bank of America Fund Manager Survey. Here's some key takeaways I pulled out from traders, because I get a lot of these institutional reports from banks, from hedge funds, from a lot of stuff, and most of the time I don't read through all of it. I just have my select hand-picked ones that I love to read, especially from certain people. Like Kalanovic is a must-read. But the Bank of America Fund Manager Survey has some interesting points. Cash levels dropped to 3.7%. When managers get this bullish, it's historically a sell level. That's a very small cash holding position. It means all of it's invested. It has exposure to the market. And they all rank the AI bubble as the number one tail risk at the moment. All right. 45% of the fund managers say overheating valuations and CapEx are what worries them. So now this is in the fund management side. It's not just you and I talking about AI bubbles. Most agree that AI CapEx has peaked. Expect hyperscalers to slow spending in 2026. And they all voted that the most crowded trade was long Meg 7. And they said positioning remains fragile. What else they say? Soft landing expected by 53%. All right. And the top credit risk is private credit blowups, flagged as next major stress point. Private credit's a big issue. The private credit is a massive market too, by the way. All right. The bottom line is this: the positioning is still bullish, the trade is crowded, and it's increasingly dependent on AI not breaking down. This is what the fund managers of Bank of America felt. All right, it's all the jibber jabber, but you're still net long bullish, right? This is the thing you gotta understand. Like, everyone's gonna have an opinion, is gonna have this, but you're tasked with managing funds. And yes, this is the number one risk, and people take this and blow it out of context. Say, oh my God, the fund managers sell. They could say whatever the heck they want. They're still long. Why are they still long? When the quarterly statement goes out to clients and they check it, and if NVIDIA does outperform, NVIDIA does really good, the last thing the client wants to look at is a statement without an NVIDIA holding in it. So yeah, you're gonna talk a lot and jawbone it, and you might be worried and concerned about it a little bit. Might be losing some sleep, but the fact is 3.7% cash level in your account. You're all in, bro. You're all in. You don't have that much more. You kind of have to hold some cash balance for redemptions and for fund management fees, etc. That's all I'm saying. I had the next little section that said why everything is selling off at once. Should I do it? Should I do it? Should I do the section? It's just 3. I mean, it's a lot. It's multiple paragraphs, but I can summarize it to 3 points. I'm going to summarize the 3 points. Number one, the reasons why everything is kind of taking a turn south simultaneously. All right, Fed turned more hawkish. Powell cast a lot of doubt on this December rate cut. The market had already priced it in. We're taking away the punch bowl from the market here, right? If we go to the party, instead of adding more rum to the punch bowl, we take the whole punch bowl away. People are not happy. Obviously. Market was already extremely extended. The S&P just had its strongest 6-month run since 2020 or 20/21. All right, that was the COVID stimulus era. It needed stimulus for that run to happen, and we've had the 6-month run that was the strongest since then. All right, so it was already overexerted, and the last thing was global fiscal worries are just kind of contagious. They're spreading. The contagion is spreading across multiple classes. All right, so I'm going to leave it there. The sell-off's about the hawkish Fed tone, an overheated tape to begin with a lot of buy side and historical buy side in comparison to recent rallies and global fiscal pressures. Not really a change in the undertone of the macro fundamentals. Okay, so that's where we're at. So I want to balance this negativity you hear out there with the reality of the situation. Normally this time of year, we're into seasonality of strength. I increased my long position in the portfolio of equities to prepare for this. And, the day trading doesn't matter because it's an order flow day trading process. So I trade the flow, but I have increased my personal family holdings of equities going into the year end. And hey, look, who knows what's going to happen? All I know is that this is statistically and historically an upwards period. All right, last thing is before we go turn around and look at the charts, options activity 68.15 to 68.20 is the largest. I don't know where that came out from. The largest call concentration on the board. I think Florida's turning me a little more southern. Although, I don't know. Florida isn't seen as the South. It's strange to me. Florida is not really the South. It is South geographically, but it's not considered to be part of the South like, Alabama, Georgia, etc. I don't know. Maybe you guys can explain that to me in the notes below. I'm sure there's a reason. All right. Let me turn around and do this call and put wall stuff. It doesn't make sense as a number just being blabbed at you. Okay, so I'm going to turn around. I'm going to make it make sense. Taking day off just like you. Marco, that's not a bad idea, right, brother? We are hardworking people. We need a day off sometimes. And not the chocolate bar, because we could easily just buy a chocolate bar, can't we? But we're not going to do that. I'm with you, brother. I wish you a really good day off, and I hope you get some fun time with people you love, doing things you love, my brother. And I'll see you tomorrow. Bob, morning, sir. J-Rad, morning, my brother. Polly, good morning. Mikey, good morning, sir. Seems like a day to sit and watch how everything plays out. For sure. If you like action and you're younger and you want to be in the action and you kind of want to feel alive, it's a good day to maybe take some volatility trades like I used to. But this day and age and where I'm at in life, it's a good day to kind of sit back and watch. Who cares about news, really? What is the purpose here? Are you still here, Martin? The market cares about news. It may interpret it in ways we don't expect, but it does care. Exactly. Mike, there you go. Thank you, sir, for helping out the community. Hey, happy trade morning, folks. Hey, Hector, what's up? Okay, let's look at the markets. So for the call wall stuff and put walls, I have them marked here, and I'm going to show you. So, hang on. Okay, that's pretty odd. I have the marked here. This is the one from yesterday, the gray one. All right, 67.60 to 67.70. This area here still has some call activity, which would suggest dealer gamma, but it has shifted. The primary amount has shifted upward to 68.20. So there is a little bit of expansion of upside potential expected by market dealers. All right, in the options market on the ES. The one for the support side, the put wall, is still at 6,600 even, and we are closer to that one. So in yesterday, even though we had a small rally and we were far away from it, calls did expand upward to the 68.20. That's an interesting thing to keep an eye on. So these are the call and put walls. We have a little more space. We're closer to support than we are resistance. If it was a day like any other day, I would be treating this different, but because it's an NVIDIA / FOMC meeting minutes day, the tone is going to have to be cautious in today's trade. Like you're going to have to just know that. That's all, right? And because there's volatility expected later on, there's going to be less people trading early on, and it makes sense, All right. It's like some people have already positioned. Professional traders have already pre-positioned themselves for what that is about to happen today and won't be making too many adjustments today unless big things happen. Big market price change happens. All right. So yesterday's market, we opened around the 66.55 level. We drove down into the low 65.94. That's about 60 points. It's a pretty significant sell-off and pretty much right off the open. We had a little rally. Let me actually go to the other side of the chart. We had a little rally here off of the open, and then boom, we drove it to lows. All right, we took this long trade in the room for the reversal, and half of the moderation team actually took the short trade. So we passed the torch from one to the other. That was a nice little trade. I was the one that took the long. I don't know why, but I'm more bullish in the last couple of days than I normally would be. You know, this is the market's lower lows, lower highs. There's reason to be bearish, but I can't just be outright bearish for whatever reason. It's something psychologically I'm working on, but there's still buy opportunities, obviously, throughout the day and sell opportunities. But the market structure was bearish, and I just feel that I was late to switch to the downside in shorting this market, and therefore, if I finally make the decision to switch, because I was late to switch, if I convince myself to finally switch and get short, it's going to start going up. I know you guys know what that means. We've been trading for long enough. I know you know that makes sense. So I was like, I'm going to stick to the side and not get jammed up on the reversal. So I was looking for the long trade. Plus, I like for mean reversion trades based on order flow activity. So that one made sense for me. All right, I got the long. Some of the team got the short. Point is, we got into the new lows of the day, and that was the low of the day. Beautiful order flow pattern right here that I happened to miss and didn't participate in because I already tapped out for the day. I already made the upside I was looking for. It was choppy, volatile, and slightly goofy for me. So that reversal moment led us straight back to the open. All right, then we sold off again. Very volatile market, you can see here. Then we did have an order flow moment here as well that was identified. Didn't do anything about it because it was after the trading room. I don't actually trade after the trading room. Once the trading room closed, I leave too. Then we rally up to the opening range high. Then we sell back down. But again, higher low or equal low at this point, and upwards we go. So today's market, had we not had all these reports and stuff, I would say despite or given the fact we're getting some lows that are kind of ascending here, we look for some upward structure if we could break the 70. 70 releases the buy stops up to the 90. 90 releases buy stops up to the 6,700. Okay, so this all could be filled in, I would say, but I have no idea with what's about to happen today. I would trade it from the long side so long as we're staying around above the 37 would be the first one, and the real kind of like capitulation dump is the 94, but that's really low. Like, you're not going to wait all the way down there to short. The trades I would have at the moment, the first thing before I would do the trade is I would tell you that the prior day close, okay, isn't that much lower than the open. Therefore, the bears had moments where they looked really good yesterday, but overall they didn't really do the job. The price closed fairly close to where the price opened, and the market has advanced beyond that. That's the read on the market. That could be a closure of this downside, which on the larger term chart looks like this. Okay, so now let's get to the final and plan. If I was to be at the computer looking for a trade today, what would I be looking for? All right, I would first be looking for longs around 24 to 28. We get down there. I like it down here. Okay. And you know, the 40s are nice too. You don't want to just get long everywhere, but I would look at these two levels. These two are very interesting to me, 25-ish and 37, 38. And if we could break the top, then you're starting to buy on a pullback here, targeting the prior top. If you break this top, you're starting to buy on a pullback here. These are upward pullback levels that you could add, but more immediately, these are the two levels I like now. And anything below 13, I'm off the long. So one long, two longs below 13, you know, you start to kind of look more bearish. Wait until, I don't like to suggest mean reversion trades to people or ones where you break the low, go below it, and rally upward, because if we do have a bearish day, you're going to be buying these things all day long. Lower, getting stopped, buying, getting stopped, finally you short it and it rips up. We don't want that to happen. Those are the levels so I'm looking for. Hopefully you guys enjoyed the morning market update. And that's it. You guys have any questions? I appreciate you all. Thank you for tuning in. I'm gonna go spend a day with my lovely kids and have some fun and do some cool stuff. And I will reconvene with you guys tomorrow morning then at 9 a.m. if there's no other questions. I appreciate you so much. Love you all. Have a great rest of your day. If you do trade, remember 2 p.m. FOMC meeting minutes. We'll see some twitchy, glitchy volatility temporarily. And depending on what the minutes come out like, maybe sustained volatility, maybe not. After the bell, we have NVIDIA definitely going to have volatility in the futures market until the 5 p.m. close. So if you wanted to trade NVIDIA, I don't know why you wouldn't. If you like that kind of crazy volatility, you could use the futures, S&P 500 futures. If you want to get really nuts, you could use the NASDAQ futures until the 5 p.m. Just be very careful. You don't want to get caught holding a position when 5 p.m. closes. Your broker will close it on you. They'll charge you a lot of money, and they'll be pissed. That's what would more than likely happen. All right, J-Rad, thank you, sir. Guys, thank you to everyone here that commented. Marco, J-Rad, Polly, Michael, Martin, you too. You found out why people care about news if you're still here. Bob, you as well, and Hector. You guys take care, and everyone else watching. Love you. Have a great day. See you tomorrow. Bye.